Welcome to Drill Down Earnings. We've got fiscal fourth quarter earnings from Coherent. Really exciting company and one I follow very closely because I own the stock. I don't give investment advice. I just want you to know what my bias is. And so I'm hopelessly biased for this company. So I like it when they put up results like they did today. I'm Cory Johnson, the Chief Market Strategist for the Futurum Group. And this is the business story behind that one stock on a move, Coherent. And yes, it is moving up and after hours. The Johnson family is happy. Let's look at why this was a beat. And indeed, it was better than Wall Street expected and better than their guidance had suggestion. $1.31 billion in revenues. That's up 9%. It's decent. Gross margins of 32.9%. Also up. That's an improvement. And they lost money. They lost a ton of money. We don't like that. But fundamentally, what drove the rebound of this business was the communications business and artificial intelligence. These guys sell lasers. They sell materials. They sell networking gear. But the networking gear that they sell is being used in some AI data centers to move massive amounts of data through optical transceivers and lasers called VCSELs. Where's my VCSEL book? VCSELs. They got that going for them. The ability to move such massive amounts of data in incredibly fast speeds was once a secret sauce in telecommunications. Well, now it's a secret sauce in AI and data centers. As such, they've seen their operating margins rebound. And within their business, yes, industrial electronics and instrumentation, but the communications business, it's not their biggest business, but boy, it's growing. When you look at that comms business, it is driving the growth for this company, and they promise more good things are yet to come. That's what they talked about a lot in the conference call. A lot of the questions in the conference call were focused on that topic. So how did the stock react when the numbers came out? The stock went up 5%. That's good. It's up 52% in the last year. That's really good. Like I said, the Johnson family's happy. And the thesis here, again, I'm totally biased. This is not investment advice. But the thesis here is that the datacom market is changing. And that's because of AI. And that there was this chat GPT moment, and it's led to a lot of spending. They used some industry research that suggested things are going to get even better. But importantly, they're going from selling a lot of 400G equipment to 800G equipment. And we're starting to talk about 1.6 terabytes of the ability to move information, 1.6 terabytes at incredible speeds. They're not there yet. There's a lot of debate about when that's going to happen, but they seem to suggest it's right around the corner. They also have a new CEO, Jim Anderson, coming into this company, formerly the CEO of Lattice Semiconductor. The announcement that he was joining the company was a great surprise to so many. The stock went up just on that announcement, which was interesting. But it was interesting to me to hear him talk about this company and kind of introduce the company to those of us who've known it, maybe longer than him, but listen to his kind of take on what this business is, why they have the right products for this moment in artificial intelligence, datacom, and yeah, even telecom. Here's what he had to say.
When you look at Coherent, not only are we a technology leader in transceivers, and I think a technology leader that you can rely on over the course of multiple generations, historically and moving forward. Well, we have an incredibly resilient supply chain, and I would say from supply chain resiliency, we are the most resilient supply chain in the industry. And so I think our big data center, datacom, CSP customers are, if they haven't recognized that already, they're definitely having more appreciation for that. So I think the combination of our technology and supply chain resiliency gives us the opportunity to win significantly more share of wallet with those big customers over the coming quarters and years.
So there you have it, the new CEO of Coherent. What's it all mean? What's your drill down earnings takeaway? And what's one number that tells you a whole lot? I'll have that right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Coherent just reported Q4 earnings. Here's an essential summary or drill down earnings takeaway. $1.31 billion in revenue, improving gross margins. I'm totally biased on this name. I own the stock. That is not investment advice. You can feel my pain, or in this case, my joy. But the most important number, the drill down earnings bite, the one number that tells us a whole lot, is 9%. 9% growth for the whole company, but 10% growth for the communications business. And that's so very important, driving the growth at Coherent. Our thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check me out at X at Cory TV. Check us out on Instagram and TikTok at Drill Down Pod, and see all of our earnings reports right here on the 6.5 channel on YouTube, and lots more of the really in-depth look at some of the most exciting stories in all of technology.